Good day, crypto traders. The price of Bitcoin is trying to break out of a narrow consolidation range. However, investors shouldn't anticipate a bold and sustained move for BTC until the beginning of the week due to the nature of market sentiment. On the 4-hour chart, the price of Bitcoin has formed an inverse head and shoulders pattern. There are three valleys in this bottom reversal pattern, with the head, the central one, being deeper than the other two. The name comes from the fact that the valleys on either side of the head are called shoulders. This technical formation calculates the move of 6% by adding the distance between the right shoulder and the lowest point of the head to the breakout point of $16,630. This reveals the target as $17,593, which coincides with the lows on June 18. As a result, Bitcoin price traders can easily book profits at this confluence. It is important to note that BTC has not yet achieved a 4-hour candlestick close above the neckline at $16,330 in order to initiate this inverse head and shoulders forecast. The Bitcoin price will be able to retest $19,011, which was the level with the most traded volume in 2022. If the $17,593 hurdle is cleared. The nature of this blockade means that BTC's last bear market rally in 2022 will be limited to $19,011. On the other hand, a lack of bullish momentum will be shown if the price of Bitcoin falls below the psychological level of $16,000 and does not recover. Sells would be able to take control with this move, causing BTC to fall below the $15,721 support level. Buyers can band together and try a second recovery rally here. The price of Cardano indicates the beginning of a bullish trend that may develop into a nice and explosive rally in the coming days. However, investors in ADA need to be careful because of the volatility at the month's end. The price action of Cardano from November 11 to November 25 demonstrates that a trend line can be drawn to connect the four lower highs that were made during that time. However, on November 26, ADA experienced a sudden uptick in selling pressure, pushing it above the trend line mentioned earlier. The Cardano price is currently battling an overhead obstacle at $0.321 after overcoming this blockade. After ADA transforms the $0.321 resistance level into a support floor, traders must exercise caution before entering long positions. The Cardano price could rise 18% to $0.382 in such a scenario. Supporting this bullish move for Cardano cost is the 30-day market worth to acknowledged worth, MVRV, model floating around 8% subsequent to skipping from a low of 14%. The monthly average profit and loss of investors who purchased ADA is calculated using this index. According to Santiment's research, a value between -10% and 25% is the ideal starting point for recovery rallies. A bottom has formed in this on-chain metric over the past 4 months, falling from 11.3% to 28.3%. Investors must pay attention to this strategy because it could cause a run-up, despite the fact that past performance is not indicative of future performance. The bullish thesis will be invalidated if the 30-cent support level is broken, even though things are looking up for the Cardano price. As a result of this development, ADA will be able to return to the $0.310 support level. After the FTX-caused crash reached its lowest point on November 9, the price of Litecoin began an incredible rally. Many investors are making money as a result of the explosive movements. However, a minor retracement may be required to extend this move further. Beginning on November 9, the price of Litecoin increased by 75% in just 2 weeks. This enormous rally appears to be experiencing a lack of bullish momentum, which has caused it to halt its uptrend. Investors must decide between a slight retracement and a trend continuation as LTC recovers from the $73.10 support level. The first seems more likely to occur for 2 reasons, while the latter is possible under strict conditions. Between the higher highs on November 6 and November 23 and the lower lows on the Relative Strength Index, RSI, during the same time, the bearish divergence emerged. Although the price continues to rise due to inertia, this discrepancy suggests that momentum is waning. However, market participants must prepare for a trend reversal as this price increase for Litecoin is unlikely to last forever. As a result, the price of Litecoin is likely to return to the $65.63 midpoint of the 75% upswing if the support floor of $73.10 is broken. A sweep of the $61.30 and $58.24 levels may occur in some instances. LTC will experience a decline of 15% to 24%, according to traders. However, the uptrend does not end with this pullback. On the other hand, the bulls will still be in charge if the price quickly recovers above $65.63. Investors can anticipate that the price of Litecoin will rise from $65.63 to $96.30, bringing the total gain to 47%. The 30-day market value to realized value, MVRV, indicator lends credence to the likelihood of a downtrend. The monthly average profit or loss of investors who purchased LTC is calculated using this on-chain metric. This index is currently around 22%, indicating that investors who purchased LTC in the last month made an average profit of 22%. It's possible that selling pressure will be added to the mix and a correction will occur if these holders decide to book profit. Even though the short-term outlook is bearish, the long-term picture of Litecoin's price is positive, with LTC possibly attempting to reach $100. However, the bullish outlook will be invalidated if the pullback fails to recover above $65.63 and produces a daily candlestick close below $55.23. The price of Litecoin could fall 15% as a result of this development and retest the $47.60 level. After 2 weeks, the price of the Shiba Inu has broken out of its tight consolidation range, indicating a shift in the narrative. The recent shift clearly demonstrates the resurgence of buyers. SHIB will likely rise as the month-end volatility begins to kick in due to this outlook. Since November 9, the Shiba Inu price has made 3 lower highs and lower lows, indicating a downtrend. But on November 22, SHIB broke through the trend line that connected the aforementioned swing lows, indicating a breakout. After confirming a bullish resurgence, the Dogecoin killer noted a 7% upswing. Additionally, the bullish divergence appears to be the cause of the 11% run-up in the Relative Strength Index, RSI, on November 22. When the Shiba Inu price makes lower lows and the RSI makes higher lows, indicating a rising bullish momentum, this technical formation is formed. Shiba Inu price may experience a trend reversal as a result of this nonconformity. Investors can anticipate that SHIB will retest the $0.000106 resistance level in the future, indicating a 15% rise for bulls. However, flipping this level will extend the rise to $0.000116, making the overall gain 25%. Investors need to pay close attention to the $0.000081 support level, despite the obvious bullish outlook. By producing a lower low, a breach of this barrier will disprove the bullish Shiba Inu price thesis. SHIB could fall 9% in such a scenario before approaching $0.000074 as a stable support level. On the last weekend in November, the price of Dogecoin demonstrates a significant increase in the strength of buyers. Doge has demonstrated a clean breakout above an immediate obstacle, indicating the potential for this trend to continue. After attempting to break through the $0.0894 to $0.0861 resistance area for more than 2 weeks, Dogecoin's price has now done so. On November 25, when the daily candlestick spiked nearly 7%, this push comes. Doge will signal a resurgence of buying pressure and initiate a run-up if it maintains above this level. Bulls are most likely to aim for $0.1125, which served as a support level from October 30 to November 7. The Relative Strength Index, RSI, shifting above the 50 level, also known as the midpoint, after 2 weeks of unsuccessful attempts supports the case for Doge. As a result, investors looking to book profits on their Dogecoin price rally can do so at this obstacle. The bullish momentum has returned and is likely to continue with this move. The bullish outlook reflected in the Dogecoin price action is likely to materialize in this scenario. Additionally, investors can anticipate a rapid 20% move from Doge during the volatile final week of the month. The bullish outlook for the Dogecoin price will be invalidated if the $0.0861 support level is broken. Holders would be compelled to sell their holdings as a result of this move, which would alter the narrative. In such a case, Doge could return to the $0.0813 support floor.